everyone. Welcome to another BAMSE Capital webinar. This time focusing on the latest forecast and the topics of our research office, BAMSE Capital Global Research. So thank you for your interest. So during this presentation, we'll take a look at the stock market, presenting the main catalysts and obstacles that would influence this performance in the coming year. We will then review the annual achievement of listed companies in 2023 and present our new forecasts for 224 and 225. Finally, we'll close this webinar with our research department topics. Without further, I give the talk to Khadija.
Thank you, Dunya. So before diving into the main topic and presenting our forecast for the years 2024 and 2025, we will review the main market drivers for the current year. So in economic terms, the agricultural campaign had a poor start, leading the government and the central bank to significantly revise their growth forecasts down to 3.4% and 2.1% respectively in 2024. So this downward revision is mainly due to two elements. On one hand, we have a contraction of the agri value added under the assumption of a cereal harvest limited to 27 million quintals versus 55 a year earlier due to the persistent drought. And on the other hand, we have an improvement in the non-agri activities, which reflects the expected investment dynamics linked to different ongoing and planned projects, notably following the announcement of the hosting of the CAN 25 and the 2030 World Cup, and also other support programs which were launched by public authorities. Regarding the earnings capacity of listed companies, we expect a 13% increase in the net income group share of our scope in 2024, followed by a consolidation of this upward trend in 2025 with an increase of 8%. So it should be noted that last year we had many exceptional elements, such as the one-off provision recorded by Maroc Telecom and contributions to the 126 fund. So if we adjust the net income for these elements, the increase should be at 7% in 2024. In terms of financial markets, the Casablanca Stock Exchange presents an attractive valuation level of 18.9 in 2024, which is lower than the levels of the past 5 years. However, we should note that the potential for market growth is less significant today compared to the beginning of the year, as it has already achieved a remarkable performance of 10% in the first 4 months of 2024. Regarding the equity bond arbitrage, it should still favor the bond market due to a dividend yield of 3.3% in 2024 versus 3.7% for the 10-year Treasury bonds, although the spread is gradually narrowing. So let's quickly review the performance of listed companies in 2023, which shows a turnover improvement of 4% to 298 billion dirhams. So this increase is mainly due to the positive performance of the financial sector revenues, benefiting from the positive impact of the interest rate hike on the interest margin and also the recovery in market operation results. As for the industries, they showed a limited increase of their revenues of 1%, which includes different commercial performances. So we have some companies like TGCC, La Bellevie, and Acdital that did really well, while others such as Total and Managem, which were significantly impacted by negative factors. So as it appears on the graph, when analyzing the breakdown of the earnings capacity evolution in 2023, we can see that the largest positive contribution comes from banks, thanks to the good performance of the NBI, which offset the sharp increase in the cost of risk. We have also the telecoms, which significantly contribute to this improvement following the non-recurrence of the Alerté fine provision in 2022. However, there is also a substantial negative contribution from the mining sector due to different negative factors such as price, volume, and perimeter effects, and also from the gas sector, which is explained by a negative price effect impacting all operators, a demand contraction, but also the payment of the fine under the agreement with the Competition Council for Total, which is estimated at nearly 270 million dirhams. In terms of achievement rate, the 2023 earnings capacity of our scope is overall in line with our forecast for the entire year. So in detail, for the financial sector, we are perfectly in line with our forecast with an achievement rate of 100%. For insurance sector, we have an achievement rate which is slightly exceeding our expectation of 103%. And for industrial sector, we have a bottom line representing 97% of our forecast. So moving on to our forecast for 2024, as I said earlier, we expect a 13% improvement in earnings capacity, which comes mainly from banking, considering the good performance of the NBI, but also the non-recurrence of exceptional costs which were recorded in 2023. So we have the donations to the 126 fund amounting to 700 million dirhams in growth. But we also have tax audits for BMCI and Crédit du Maroc for 200 million dirhams according to our calculations. So these positive elements should offset the slight expected increase in the cost of risk that should accompany the growth in loans, but also cover the potential rise in the cost of risk in Morocco, which is linked to the negative impact of Oxygène and Relance loans, and also the deterioration in credit ratings in some countries for banks with the African subsidiaries. It also should be noted that the anticipated increase in provisions could be offset by possible reversals resulting from the forward-looking provisioning policy, which was adopted by the sector in 2023. We also have the telecom sector, which should contribute to the rise in the net income group share due to the non-recurrence of the donation to the 126 fund, but also the non-recurrence of the 500 million provision relating to WANA. The construction sector also should have a positive performance, which is linked to the production cost optimization and also the resumption of the construction sector's dynamics, which is expected starting from 2024. In 2025, the earnings capacity is expected to improve by 8%, which includes an 8% increase for the industries, driven particularly by Managem, which should benefit from the sustained high precious metal prices, and also the production start of Boto and Tizart projects from H2 2025. We have also Lafarge Holcim Maroc, which should benefit from the continued dynamics of the construction sector. And finally, Africa Gaz, with the potential deployment of energy distribution in Morocco. As for the financial sector, the net income group share should improve by 8% also, benefiting from the continued NBI growth, but also the normalization of the cost of risk and, of course, the assumption of an improved economic situation. And finally, for the insurance sector, the net income group share should improve by nearly 9%, considering both the expected improvement in technical and activity indicators for the three listed insurance. So regarding the overall operating margin for industrial values, it is expected to slightly improve by 0.5 points to 17.5%. Mainly due to a slight decrease in input prices in the context of easing inflationary pressures, but also due to the non-recurrence of Maroc Telecom's provision. So adjusted for the WANA provision, which was recorded by Maroc Telecom in 2023 for 500 million dirhams and the contributions to the 126 fund, the net income group share is expected to improve by 7% in 2024. It should be noted that the adjustments that were made do not take into account the potential impact of Maroc Telecom's compensation to WANA. So we had an initial judgment of 6.4 billion dirhams in the first instance, which was appealed by Maroc Telecom. In terms of valuation and considering the positive evolution of the earnings capacity as well as stock prices, our scope should trade at PE levels of 18.9 times in 2024 and 17.5 times in 2025, which is still a high level, but lower than the past 5 years. And in terms of dividends, we expect a 6% increase in the total dividend amount to 21 billion dirhams, following the improvement in earnings capacity. However, considering the larger increase in market cap in a bullish market context, the 2024 dividend yield fell to 3.3%. So this is lower than the yield on the 10-year Treasury bonds, which is at 3.7%, meaning that the arbitrage remains in favor of the bond market, even though the spread continues to narrow. So in March 2023, the spread was at 143 basis points, and now we are at 38 basis points. For 2025 and excluding exceptional distributions, we expect the total dividend amount to increase by 2% to 21 billion dirhams for a dividend yield of 3.4%. So that concludes the forecast section. We have also selected 4 topics from our BKGR research team. So we have Attijari Wafa Bank, Marsa Maroc, La Belle Vie, and Lafarge Holcim, which we believe still have a significant growth potential. So without further ado, I will hand over to Iman to present the first topic.
Thank you, Khadija. So let's move on and let's start with Tijari Wafa Bank, which is the largest, first largest market cap in the Casablanca Stock Exchange. So we have selected this stock once again for the strength of its fundamentals and the potential it offers. On the commercial front, the bank leads the sector in terms of distribution with a market share of 26.97% and stands as a challenger in terms of deposits with a market share of 25.21% at the end of 2023. Additionally, it maintains the largest distribution network in Morocco and the densest in Africa, with 7,223 branches. This position is said to be further reinforced by the acceleration in loan distribution linked to the major national projects planned for the period 2024 to 2030. With an allocation ranging from 900 million dirhams to 1.3 billion dirhams. These funds are notably dedicated to the organization of the 2030 World Cup, infrastructure projects, and the reconstruction of Al Hawz region. On another note, the bank demonstrates strong financial health that is continuously reinforced by the issuance of contingent convertibles. So the latest one took place in December 2023, totaling 2 billion dirhams. Thus, the group's Tier 1 capital ratio stands at 11.65% and the capital adequacy ratio at 12.78%. For its part, the liquidity coverage ratio stands at 137% on an individual basis and at 151% on a consolidated basis. On the operational front, it should be noted that Tijari Wafa Bank has implemented an ambitious saving plan, enabling the company to reduce its cost-income ratio at 40.7% compared to 42.93% in 2022. And excluding the contribution of 390 million dirhams to the fund 126 for managing the effects of the earthquake, the cost-income ratio stands at only 39%, which is the lower level recorded in the sector. Finally, in terms of cost of risk, the bank shows a competitive level of 1.04% compared to a sector average of 1.27%. And it also maintains a solid risk management policy with a significant general provision on an individual basis of nearly 3 billion dirhams. So let's move on to the stock market front. The value is currently trading at 515 dirhams, representing a year-on-year performance of 11.93%. Its price-to-earning ratio in 2024, according to our forecast and based on the current price, is expected to be 13.7 times. In terms of forecast, the company is expected to record a 7% increase in net banking income in 2024, reaching 32 billion dirhams linked to the transmission of the residual key rate hike and a double-digit growth in the fee margin. So the net income group share is expected to grow by 7.6% to 8.7 billion dirhams, mainly driven by a reduction in the cost-income ratio and the stabilization of the cost of risk at 1.04%. Let's move on to the next slide. So for the valuation of Tijari Wafa Bank, we adopted a net income group share discounting method, and we are anticipating a compound annual growth rate of 6.3% over the period 2024 and 2028. And in terms of warnings, a deterioration in the quality of the portfolio in Morocco and Africa due to the downgrade of the credit ratings of the countries where the bank operates could lead to an increase in the cost of risk. And taking all these factors into account, our valuation suggests a target price of 590 dirhams, representing an upside of 15% compared to the current price, and therefore we recommend buying this stock. So I'll let the floor to my colleague, Tisa.
Thank you, Iman. So our second favorite stock for this webinar is Martin Maroc. It's a stock that we have often recommended and for which we maintain strong interest. So our opinion is supported by several factors, especially the transshipment activity, which continues to offer interesting growth prospects for the future. I would like to remind that Tanger Alliance already reached a capacity of 1.5 million TEU in 2023, which was initially planned for 2025. And for this year, we expect a projected capacity of around 1.7 million TEU. So Martin Maroc should also benefit in the medium term from the commissioning of the Nador West Med port, which is scheduled for late 2024. Of course, in case of obtaining a concession on this project, which has already reached a progress rate of 96%. So the port is intended mainly for the transshipment of containers and energy products. It should start with a capacity of nearly 3.5 million TEU and 25 million tons of hydrocarbons, reaching a capacity of 15 million TEU and nearly 55 million tons of hydrocarbons in the longer term. The Dakhla Atlantic port, which is planned for 2029, should also offer new growth opportunities for the port sector with a forecasted annual traffic of 35 million tons, allowing the handling of 5 million tons of liquid bulk, 25 million tons of goods and solid bulk, and 1 million containers. For 2024, we anticipate an improvement in all business segments. So container traffic is expected to register a forecasted increase of 10%, driven mainly by the sustained growth of the transshipment. The solid bulk segment should see an improvement of 9%, driven by exports of clinker, livestock feed, and feldspar, and imports of cereals. For the liquid bulk segment, we expect a slight improvement of around 2% after the year 2023 penalized by a decrease in fuel imports. Finally, and still in terms of strength, I would like to highlight the company's solid financial performance, which is demonstrated by a strong increase in EBITDA, robust EBITDA margins, a significantly reduced net debt of only 24 million dirhams, and a comfortable gearing of 0.8% compared to around 12% last year. So now let's move on to the financial and stock markets indicators. So the stock is currently trading at 286 dirhams with a year-to-date performance of 2.9%. Its price earning ratio, according to our forecasts and based on the current price, is expected to be 22 times in 2024 and 20 times in 2025, compared to a price earning ratio of almost 24 times in 2023. Regarding financial aggregates, we expect a well-oriented commercial activity in 2024 with an expected increase of 8.5% in revenues, mainly driven, as I mentioned earlier, by the good performance of the transshipment activity and also by solid bulk. So in terms of net income, the operator should record an increase of nearly 12%, driven by the good performance of commercial activity and the non-recurrence of the donation to the earthquake fund for an amount of 100 million dirhams. Now let's move on to the evaluation of Marsa Maroc. So we used the DCF method with a risk premium of 8.2%, risk-free rate of 3.7%, CAGR of revenues from 2024 to 2033 of 5.2%. In terms of investments, the group should allocate a budget of 2.4 billion dirhams over the next 5 years for investments in handling equipment. In 2024, the operator should start with 2 infrastructure projects aimed at enhancing the competitiveness of its port facilities with an estimated capex of 650 million dirhams. So 400 million dirhams will be allocated to the port of Casablanca and 250 million dirhams to the port of Jafra Asfar. So it should be noted that our valuation does not take into account the potential of the new port infrastructure of Nador West Med. We nevertheless tried to make a simulation to see the impact of Nador West Med on our valuation. So if we consider a budget of nearly 1 billion dirhams and additional flows estimated at 1.25 billion dirhams in the terminal year, our target price would be 360 dirhams with a CAGR of revenues of 7.1% for the next 10 years. So considering these elements, we recommend accumulating the stock in portfolios with a target price of 321 dirhams, representing an upside of almost 12%. So now I will let you with the WM.
Thank you, Ibtissam. Hello, everybody. So now let's move on and to focus on the cement sector with LafargeHolcim Morocco, where growth appears really to be promising thanks to various positive sectoral factors that I will attempt to clarify to you. Firstly, you have to keep in mind that in the Moroccan market, LafargeHolcim Morocco holds a dominant position with an estimated market share of nearly 55% and a strong presence in the north, central, south, and east regions of the country, accounting for like 65% of the national consumptions of cement. By the end of 2023, you have to know that the cement company achieved a well-oriented commercial performances benefiting from 2 factors. In one side, the increasing the clinker sales for export, and on the other side, the recovery of activity in the domestic and the national markets. And in the operational side, the company confirmed with the 10% increase in the EBIT, which was driven by the combined effect of increased revenue and also optimized production costs. Under all these conditions, the operational margin stands at like 36% compared to 33% at the end of 2022. And thus, it is consolidating the fact that LafargeHolcim Morocco have really steadily and have always had improving margin levels over the past years. In terms of perspective this time, and in the coming years, LafargeHolcim, the Moroccan leader, will benefit from several sectoral factors, including first, a revival of significant infrastructure construction projects heavily reliant on the cement consumption. And here I'm talking about like the hydraulic infrastructure sector. Secondly, we have the rebound in the real estate sector, which is driven by the implementation of the direct assistance for home buyers. And according, just so you know, to the latest statistics from the Ministry of Housing, implementing the housing assistance has like shown a really significant enthusiasm with a total of 41,000 registration requested, which were recorded since the launch of the digital platform Damsakan. A third factor to keep in mind, the significant increase in sports, hospitality, airports, and road infrastructures aligned with the Africa Cup of a Nation in 2025 and the co-hosting of the World Cup in 2030. And finally, the rehabilitation program for the region's that were affected by the Al Hawz earthquake, aiming to meet the market's cement demand. On another side, I would like you to keep in mind the fact that LafargeHolcim Morocco is also trying to capitalize on new stages of developments, and it includes two mainly: the launch announced in September of last year of her new the new unit of valorization of fuels and raw materials, which is like a derived from the waste within the factory based in Terudent. And also we have the deployment of its new development strategy for sustainable solutions in Oujda, which are like aiming to promote more friendly construction practices. And here I'm talking about for example, the introduction of its new product, EcoPlanet Blendé, which is like a product with a reduced carbon footprint of 30% compared to the standard cement that everybody knows. So now let's move to the other slide, and let's move on to discuss LafargeHolcim and the stock in stock market aspects. This time the value is currently trading at a price of 2002 dirhams. In terms of numerical forecast, Lafarge is expected to record a 6% increase in revenues in 2024, and this increase is, according to us, mainly attributed to the revival of the activity across the entire construction sector nationwide, and also the rise in clinker sales for exports. And finally, the last slide, and this time to talk about the valuation of LafargeHolcim Morocco. We relied, as my colleague just said, on the DCF method and adopted the same assumptions that were just presented. In terms of warnings, and as you can see on the slide, among the main points that I want you to keep in mind, we should stress on the fact that there is a significant correlation with the real estate sector, which accounts for like 70% of the cement sales. And on the other side, the probable increase of operational costs for LafargeHolcim Morocco, like for example, the petcoke. And so considering all these factors, we arrive at a target price of 2,426 dirhams, which is representing like an upside of 21% compared to the current price, implying a price earning ratio of 24 for 2024 and of 22 for 2025. Therefore, our recommendation is to buy this stock. That's it for Lafarge. I will leave the floor to Abtissam.
Thank you, Wiam. So I suggest concluding with the food distribution sector to present the last stock of our topics. It is La Belle Vie. As you know, the group is engaged in an ambitious organic growth strategy with 19 new stores opened in 2022 and 24 stores opened in 2023. So the group should accelerate this expansion plan in 2024 while prioritizing customer proximity. So for this year, the opening program should reach, according to the management, 5 Atacadão, 1 hypermarket, 20 Carrefour markets, 10 Carrefour Express, and 20 Supeco. So the operator finally decided to position itself in the discount segment with the Supeco brand, which was deployed in 2023 after 5 years of testing. So this is a supermarket format with stores less than 200 square meter and discount pricing. La Belle Vie aims to open 409 Supeco stores within 5 years with a target revenue of 2.5 billion dirhams. So we should also note the rise of e-commerce. The operator continues to strengthen this channel with a 32% increase in transactions to 840,000 orders in 2023, and revenues that grow by 55% to 152 million dirhams. So La Belle Vie should focus on expanding the available offerings on the Bringo platform and extending to new cities, while the application already covers about 20 cities. I would like also to emphasize the significant potential of mass retailing in Morocco, given a still low penetration rate that does not exceed 16%, and the shift of a growing segment of consumers towards the modern distribution. The last point I would like to draw your attention to is the trend towards the financialization of mass distribution. The profit strategy of major international distributors tends to reduce fixed capital, particularly by selling real estate assets to capture a non-operating income primarily through financial investments. This is something Label Vie seems to have already started with the sale of 19 assets to defend Teramis last year, and also through the development of supermarket franchises. Large distribution operators also tend to strengthen their short-term investment strategies, taking advantage of the strong cash generation from significant delays between supplier payments and sales receipts. Label Vie is still far from its full capacity and should increase the size of its investments to enhance its financial profitability. Finally, I'd like to point out that Label Vie has published its Q1 indicators with the sales increasing slightly by 1%. So the operator opened just one store in the first trimester. We believe, however, that the expansion plan will be accelerated over the rest of the year, given that many of the stores to be opened are already under construction, according to the management. So now let's move on to the next slide. The stock price is currently at 4,250 dirhams with a year-to-date performance of 1.2%. Its price earning ratio is expected to reach 21.1 times in 2024 and 19 times in 2025. So this is a level close to the minimum price earning ratio of 17 times recorded over the past 10 years. In terms of forecasts, we expect for the year 2024 a consolidated revenue improvement of around 15% to 18 billion dirhams, driven mainly by the full effect of the stores opened in 2023 and also by the favorable volume impact of the stores expected in 2024. For the next year, Label Vie should record commercial achievements with a growth of 19% to 21.7 billion dirhams, mainly benefiting from the scope effect and from the continued organic growth strategy of the group. So considering these elements, we recommend buying the stock with a target price of 5,109 dirhams, representing an upside of around 20%. So that's all for Label Vie. Now I will let you with Dounia.
Thank you, Abtissam. So we can now begin the question and answer session, which we hope will be very cool. So we are waiting for the first question to start this session. So we already have first question, and it's for Abtissam about Label Vie. So what are the challenges facing the development of the discount segment? And why is Label Vie positioning itself and its segments? Would it not be more profitable to strengthen its position on Atacadão? So, Tissam, I'll let you the floor.
Yes, Dunya. So indeed, the discount model named Supeco is not very easy to make profitable, given the strong competition from hard discounters such as the Turkish operator BİM, which is already well established in Morocco. We have also a new player entering the low-cost market, which is the Egyptian Casion. Another challenge is that this type of models is generally based on a policy of own branding at attractive prices, and Abelvi's portfolio of own brand products is still, let's say, very small. As for the reason why Abelvi is positioning itself on the discount segment, so the current expansion and development strategy is based on a diversified multi-format positioning. It's true that the cash and carry model allows the group to negotiate more advantageous conditions with suppliers, but it does create working capital requirements compared to other segments.
Thank you, Tissam. So we are waiting for the further question. So we have one more, little more general. So it's about the World Cup. What is the expected impact of hosting the World Cup on the Moroccan economy? Yes, it's a really good question, and then we'll let Khadija answer it.
Thank you, Dunya, and thank you for the question. So first of all, I'd like to say that the hosting of the 2030 World Cup in Morocco is a historic opportunity for our economy. The expected impacts are diverse and can be analyzed in the short and long term. So although the financial outcome of this event may be negative, similar to what has happened for the host countries of previous editions, we anticipate a significant increase in infrastructure investments in the short term from an economic standpoint. So this includes the construction and renovation of stadiums, the improvement of transportation networks, and also the development of tourist accommodations. And these infrastructure projects should not only create jobs, but also boost the construction sector and stimulate domestic demand. As for the medium and long term, the impact should also be substantial. So the World Cup is expected to attract millions of visitors, thereby boosting the tourism sector. We also anticipate an increase in tourism revenue, visitor spending, and a multiplier effect on related industries such as restaurants, transportation services, and retail. So finally, the improved infrastructure and the experience gained in managing major international events could enhance our country's capacity to host other large-scale events in the future, thereby solidifying its position on the international stage.
Thank you, Khadija. So we have two questions this time about the cement industry. The first one is about LafargeHolcim Maroc. What would be the quantitative impact of opening the new West unit on LafargeHolcim revenues? And I think it's for WM.
All right, thank you for your questions. Thanks, Dunya. So I would like to clarify one point, that we don't have really this detailed information. However, and according to the management, this unit should enable Lafarge-Holcim Morocco to boost actually its performance to nearly like 130,000 tons of waste valorized annually through the bio-drying process, which actually allows the use of biofuel instead of the petcoke, all right? And this would really lead to a significant savings in energy costs, and also contribute to a considerable, I would like to say, environmental gain by minimizing actually the carbon footprint of the group's factories. Another factor, the fact that the use of the solid recovered fuel by Moroccan industries offers really another advantage for the country's foreign currency reserves, as actually it helps to reduce the energy bill by decreasing the Moroccan imports of hydrocarbons. And let me just remind you that Lafarge-Holcim Morocco has been like really actively engaged in this proactive waste treatment and valorization policy since like 2007, with an initial capacity of 40,000 tons per year through its dedicated subsidiary Geocycle. And just one last point, according to this question, according to our forecasts, the cement industry in Morocco currently doesn't really exceed a substitution rate of around 50%, 15%, compared to over like 30% in Europe. And this really indicates that the potential for a significant savings in fossil fuel consumption, particularly for the actors and the operators like Lafarge-Holcim Morocco. So that was according to the first question. Dunya, can you please repeat the second one?
And the second one, and there's second and third one, and it's a little bit the same. It's about the first one, can you discuss why a cement company should attract such a premium rate? And the second one, it's do you think the World Cup will influence the most together with Lafarge that touch on the sector mentioned? So it's all about the sector cement and how the World Cup can influence the cement company. So can you answer to this question, please, Wiam?
Okay, thank you for your question. According to the rating premium rates given for Lafarge-Holcim Morocco, it stems for the quality actually of its commercial, for its industrial positioning in areas where really there are like the greatest number of infrastructure projects that are coming and that are implemented, particularly in regions where the country plans actually to organize major events. Such as the World Cup 20, or the World Cup that will be co-hosted by Morocco.
And the second question we have, it's which value can be influenced by the organization of the World Cups?
Yes, according to this one, I just heard the question. It's all the other operators in the construction sector. I mean the real estate operators like Allianz, RDS, and Addoha. I mean also the constructors like TGCC, the other operators in the cement sector like Simon Jomarok or Lafarge-Holcim Morocco. That's it. I hope I answered your question.
Thank you, Wiam. Yes, it's very clear. So we have another question. It's this time for Khadija again. It's about the Mazi. What are your expectations for Mazi growth in 2024?
Thank you, Dunya. So currently, the market seems to be well-oriented, as evidenced by the year-to-date Mazi performance, which stands at nearly 11%. So this positive trend could be further supported by the anticipated the anticipated strong earnings capacity in 2024 as projected in our forecast. So I would say that in a positive scenario, and if additional positive factors arise to accelerate domestic growth, we could close the year on a performance between 12 and 15%. However, in a more cautious scenario, if the trend reverses due to negative factors, we expect the year to end with a performance between 8 and 10%.
Thanks a lot, Khadija. So I think we have a last question. It's about Marsa Maroc, it's for Ibtissam. So does Marsa Maroc intend to position itself on Nador West Med as sole operator or as a joint venture?
Actually, both scenarios are valid. It's not yet confirmed, but the group could position itself as the sole operator, as it could enter into a joint venture with another strategic operator, as it was the case for Tanger Alliance. I just would like to highlight that our target share price of 360 dirhams is based on capex of 1 billion dirhams, assuming a joint venture. So if we double capex, our target price would be 349 dirhams per action.
Thank you, Ibtissam. I think we don't have any further questions. So thank you all for taking part in this webinar and for enriching this debate and reflection with your pertinent question. I remind you that you will be able to access the video of this event tomorrow on our platform, www.bmccapitalglobalresearch.com.